and welcome to this week's edition of BOI Weekly. I am Victoria Longjohn. Now, recently, the Bank of Industry hosted the third annual General Assembly of the Association of Nigeria Development Finance Institution in Abuja. And as expected, heads of development finance institutions such as the African Finance Corporation, the African Development Bank, the Bank of Agriculture, and the Federal Mortgage Bank, as well as heads of development finance institutions from the 36 states and the FCT, were all in attendance. The Association of Nigeria Development Finance Institution was inaugurated on October 15, 1982, with 15 foundational members, and today the association continues to grow with more membership and its impact felt across the country. The Managing Director of Nigeria's foremost development bank, the Bank of Industry, Mr. Olukayode Piton, was also at the event, where he advocates the need for a joint force to provide more loans to owners of small, medium and micro enterprises. The target, according to him, is to help entrepreneurs create jobs and income for themselves and their employees. Once again, welcome to the program. Welcome back. The Managing Director and Chief Executive Officer of the Bank of Industry, Mr. Olukayode Piton, says the bank has commenced its innovative financing mechanism. He also noted that its total assets have grown significantly by over 300% between 2017 and 2023, reaching 2.4 trillion naira by the end of 2022. Now, other speakers at the meeting also shared their thoughts and state their expectations for the SME sectors in the years ahead. Please watch this report.
It's the third annual General Assembly of the Association of Development Finance Institutions, ANDFI, and gathered in this hall are experts in the nation's financial sector. They converge to brainstorm on innovations to complement their funding with the sole aim of improving small businesses in Nigeria. The meeting begins with a review of the meeting held on the 11th of May 2022, presided over by the chairman of ANDFI Technical Committee, Dr. Ezekiel Hussaini.
Okay, so in addition we should add conference fee?
Yeah, conference fee.
Okay.
Participation to the annual general
so
meeting.
Members and non-members.
Yes.
For some time now, the association has been at the forefront of getting members together to rub minds on how to improve funding and help expand the businesses of entrepreneurs through the provision of innovative financing.
Nigeria is currently home to an estimated 200 million citizens and is projected to experience the largest population growth in Africa by the year 2050 to about 400 million people. As we strive to achieve sustainable development goals and address global challenges, it has become increasingly clear that traditional financing models are inadequate. We need fresh ideas, creative approaches, and collaborative efforts to bridge the financing gap and drive the transformative changes our country desperately needs. This is where innovative financing mechanisms that will complement traditional DFI's funding sources come to play. By utilizing specialized funding arrangements, complemented by non-financial services, we as DFIs are able to act as growth catalysts to the development of the Nigerian economy. Through innovative financing, though innovative financing presents a veritable tool for DFIs to raise additional resources for development, specific market failures and institutional barriers prevent private investment from flowing to developing countries. Key challenges that have impacted developmental aspirations include asset deterioration, weak corporate governance, and risk management frameworks, etc. These issues have also influenced the success and growth of DFIs and private sector players in the Nigerian economy, which is one of the issues we plan to discuss today. As we all know, DFIs play a significant role in ensuring sustainable economic and social development. This is evident in developed and developing economies, where DFIs are instrumental to their economic successes. Therefore, we must continuously work together, leveraging on our expertise, resources, and networks to unlock transformative projects by working in synergy with the organized private sector and our respective governments. Collectively, we can deliver the level of sustainable social and economic development that Africa needs. At this point, I would like to highlight the importance of international cooperation and solidarity in advancing innovative financing for developmental impacts. Developed countries can support developing countries by providing resources, technology, transfer, and capacity building. Multilateral institutions, therefore, have a critical role to play in coordinating efforts, mobilizing resources, and ensuring the effective implementation of innovative financing mechanisms.
The Bank of Industry is Nigeria's oldest and largest development financing institution. The assets of the bank have grown by 381% between 2017 and 2023, reaching 2.38 trillion naira by the end of 2022 and closing at 3.29 trillion naira as of June 2023.
In today's global landscape.
At the ANDFI event, which held recently in Abuja, the Managing Director of the Bank of Industry, Mr. Olukayode Piton, explains that the bank is introducing more innovative financing mechanisms to contribute to the nation's development.
Using the Bank of Industry as an example, over the years, we have successfully raised funds from the international capital market, which has allowed us not to only fill critical gaps and provide necessary funding for transformative projects, but also exposed us to global best practices and innovative solutions that promote institutional development and improve the effectiveness of developmental initiatives. Since the Bank of Industry commenced its innovative financing mechanisms, the total assets have grown between 2017 and the first half of this year by 381%, reaching 2.38 trillion by the end of the year 2022 and closing at 3.29 trillion as of June 2023. The equity position has also grown by 188% from 220 billion in 2017 to 634 billion by the first half of this year. The creation of quality risk assets has helped the bank to maintain a non-performing loan rate of about 2% as at the first quarter of this year. This falls below the regulatory threshold of 5%. The bank maintains a strong corporate governance structure. Its accounts are audited by one of the big four firms and is rated by international and local rating agencies, including Fitch, Moody's, and Augustus. In fact, our local rating with Fitch and Augustus is AAA. In a nutshell, the benefits of innovative business initiatives cannot be overemphasized. So when you begin to spread out, they force you to do things properly, and it benefits the organization in the long run. To deepen our activities in innovative financing, we must foster mutual support and encourage cooperation among our members. This can be achieved through the exchange of technical expertise between our member DFIs and similar organizations globally. We are in discussions with a few of the DFIs we work with overseas to send our staff on cross-posting, and I think we should do more of that because then we can bring in best practices locally. Likewise, we must prioritize the professional advancement of our members while leveraging on the knowledge from best-in-class economists that have adopted innovative financing initiatives. As I conclude, I would like to appreciate everyone's efforts to date and use this opportunity to appeal to all our stakeholders to continuously work together in synergy with the sense of purpose to promote sustainable development across various sectors of the Nigerian economy.
And then the conversation moves towards innovative financing for development impact. And financial institutions are making a case for collaborative efforts to drive inclusive growth in Nigeria.
The scale of the developmental challenges that Africa faces, and of course that Nigeria faces, should keep all of us awake at night. It's just the reality. And it depending on the data that you look at, some data expect that Africa needs to spend at least $150 billion annually for the next decade for us to close the gap in terms of our infrastructure development relative to the rest of the world. We also do have data that shows that the fact that we have such a huge deficit in our infrastructure, our GDP productivity is kind of, inhibited by at least 2 percentage points per annum. So clearly, there's a big job for all of us to do. And to do this kind of financing, all of us need to work together. We all have to be innovative, and we all need to work together as an ecosystem to address the challenges before us. So the magnitude of financing means that we all have to be super innovative in order to meet our continent and our country's developmental goals. We cannot continue to do exactly the same thing that we've done over and over and over again, and we should expect a different outcome. That's not going to happen for us to expect a different outcome. Whenever I meet global investors, I tell people that my job really is to be in aircraft and live in hotels, all trying to find investors for Africa. But whenever I meet investors anywhere in the world, the first thing I tell them is how blessed we are as a continent. And they all admit it. This is perhaps the only continent that has yet to be tapped. The rest of the world is aging, population is declining, Africa is producing babies, and we're actually having lots of young people. Now, to me, that's a plus. If I think about that, that's a plus. However, what keeps me awake is if we don't keep these young people engaged, if we don't create jobs for them, that young population that should be a strength is going to become a problem for all of us. All of us in this room are not exempted from that. So I think it's very important for us to think about how do we grow our economies? How do we help our continent? How do we create opportunities for all the young people in this continent so that this hopelessness that we currently see, how do we reverse that? And obviously, that requires all of us as a development finance ecosystem to work together in achieving that. So I'd like to remind us, I think when Mr. Peter was giving the opening remarks, he mentioned some of these things. DFIs are established to address market failures. We know that's really why we were created, and to address developmental challenges. Private capital is always looking for supernormal returns sometimes. So a lot of things we do, the private capital will not do it. They only do it because we are there, providing some kind of support. We are also there to provide counter-cyclical support, in my view, to promote economic stability in times of crisis. And this is something we've done at AFC significantly. I say to people that the biggest crisis we faced in recent time was COVID. And when COVID happened, the rest of the world was doing quantitative easing, pumping money into their economies. The US was printing money, EU was doing the same. But Africa, unfortunately, didn't have anyone to do the same. Rather than seeing support, capital was reversing and leaving our continent. So DFIs like ourselves, we just had to step up in order to fill that financing gap. In fact, in May last year, we announced a $2 billion support to African FIs in order to help provide this counter-cyclical support. I also believe that it's our duty to work closely with governments in order to help them to translate some of their goals into actionable policies. So advocacy is a major part of our job. It's so easy to sit on the sideline and complain, But as DFI community, complaining is not our job. Our job is to get things to happen. And I think that's really the mindset that I would like to situate my conversation this morning. So in my opinion, I think over time, DFIs have fulfilled these roles with varying degree of success. I mean, it's a room where all DFIs, so it's okay for us to tell ourselves the truth when we're talking within ourselves. We are plagued with a reputation of being overly bureaucratic, whether true or not, but even I see that when we deal among ourselves. We're often criticized that we're slow in responding to changes, and some people say we are not entrepreneurial as a DFI community, which is a problem. So I think it's something that we need to think about. So when we're talking about innovation, we also need to think about where we're coming from in terms of some of the baggage that we carry as an ecosystem. The scale of development before us means that we have to be innovative in order to remain relevant. And added to this is the reality of the difficult capital market conditions, especially in the last 18 months. The last 18 months have been the worst in the history, at least recent history, for most of us in the capital markets. We've seen credit dry up significantly for African issuers and borrowers. We've seen access to markets being short for several months. So we cannot keep doing the same thing and expect a different outcome. So we need to think of a different way in order to weather the current storm. So it's with this background that I'll be addressing the topic, innovative financing for development impact. And what I want to do is to address this topic from different sides of the balance sheet, okay? So I want to look at the asset side, innovation on the asset side, innovation on the liability side, innovation on the equity side. So I want to say, please pardon me, in addition to being a charter holder, I think she said that, CFA, I'm also a chartered accountant. So for me, when I'm discussing business problems, I think of financial statements and how they add up. So when I'm talking asset, liability, and equity, it just simplifies the complex problem for us. So I'm going to be talking from the asset side, the liability side, as well as the equity side of the balance sheet. So let's start with the asset side. Of course, we know that historically, all of us in this room, as DFIs, we rely primarily on loans. We want to give loans and loans and loans to our clients. So loan historically has been the way we've been driving development impact. And in fact, many DFIs are very rigid about the types of loans that they provide. So some will tell you, all I do is senior loan, all I do is trade finance, all I do is this. And so when the developmental problem comes, what they do is to check the shelf to see, do I have a product for this developmental problem? And if the answer is no, I don't have that product, then the problem can continue. It's not for me, go to someone else. And that to me explains why we still see all those issues on our street. So with that at the back of our mind, let's remember that we need to find a way to invest our time and efforts in preparing projects. And it's not free. I mean, for us, project development is a profitable part of our business. In fact, we pioneered using project development facility as a way to scale up our investment, and our portfolio has grown significantly since we started doing that. AFC also was the founder of Africa's Infrastructure Development Association. What we did a few years ago was to create this platform where people can exchange ideas and prepare projects and ensure that projects move from ideas to financial close as quickly as we can. So in addition to DFIs being active in project development, I think we need to be innovative in terms of the financing instruments that we deploy. I think that's pretty important. We should move beyond providing traditional loans to providing mezzanine finance, hybrid financing, and other financing solutions. In fact, I would argue that as DFIs, we should actually even think about providing equity finance to a lot of projects in our country as well as our continent in order to de-risk them. The major reason why lenders don't come into projects a lot of times is because the equity is not sufficient. But I think we're in a better position to provide this type of capital in order to attract outside capital into projects. We need to play other roles as well, such as risk mitigation, using guarantees in order to crowd in private capital.
Using the platform of ANDFI and the fact that we have a lot of state investment companies around here, I hear you talk a lot about those crowding in funding from different parts. But I also know that there are issues about funding for some of the state investment companies and other things so that what they learn about impact within the country. From the AFC perspective, have you thought of innovative products now for local investment companies in Nigeria that are having those challenges? I don't know if you've thought about them, or what will you advise for them to be able to also crowd in some funding, because it's a major issue for them?
Is to work through the financial intermediaries here in Nigeria. So we work very closely with Bank of Industries. We work very closely with all the commercial banks as well, whereby we provide financing for them and hopefully, require them to cascade that down because they are much closer to people in the States. Unfortunately, because we are a bit wholesale, we are not close enough to know what is going on, but we believe that our financial intermediaries actually have a better sense of what is going on. So when we announced $2 billion last year of financing, a lot of that has been coming through the banking system, and I believe there's significantly more that we'll be doing, channeling that through the banking system. I also believe that our efforts through an infra credit, like I mentioned earlier on, would help potentially to do lots of state projects and get some state entities funded from the huge pension money that we have in Nigeria. So we unlocking that. More importantly, we also can issue bonds in capital markets to raise local currency. We intend to do that to start funding ourselves even in Naira. And once we have all the Naira, we have to deploy that Naira as well. So everybody that is a very well-run business is a candidate for us to finance.
And then there were more voices in support of collaborating and improving financing for entrepreneurs.
This is the best time for this program. And the reason being that this is the period we are all struggling to be able to finance most of the projects and products that we have in most of our states. And so we need to bring in innovations and be proactive in whatever we are doing now. So presently in Lagos State, that is exactly what we are doing. We've been proactive, we've been innovative in the way we do things, and we've been looking at ways to be able to leverage on most of our assets to be able to serve as equity most of the things we are doing. So that most of the times it's not going to be loan. We should be able to look inward and see that what we are doing is right. And at the same time, we are equally developing the capacities in Lagos State, because it's one thing for you to have what you want to do, another thing is for you to have the right amount of capacity to be able to do it. So we are equally leveraging on that aspect also. So in Lagos, and I think by and large, I will encourage all other state governors also to follow suit, to be able to do all these things so that apart from our ratings in Lagos State, we are sure that at least in the next few years we'll be able to bridge the infrastructural gap that we have in Lagos State based on what we have been doing and from everything that we have even heard from this, which falls in lines with everything we have been doing in Lagos State.
The major takeaway is that there is a need to prioritize the advancement of members of the association and leverage on the knowledge that will improve financing initiatives among the institutions.
Welcome back. Now, over the years, the Bank of Industry has continued to provide interventions for businesses to thrive. And I bet you there's more where that came from. These interventions, which focuses on men, women, and youth, is definitely making tremendous impact on the nation's socio-economic development, to the delight of entrepreneurs. Now, are you an entrepreneur out there or know anyone in need of support to grow his or her business? Kindly visit any of the branches of the bank closest to you or log on to their website at boi.ng. You can also follow the bank on all social media platforms as displayed on your screen. And that's it on this week's edition of the program. I am Victoria Longjohn, and thanks for watching. See you next time.